Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, a strong session, no Monday blues. One would have thought we will see a manic Monday,
Correct.
given the fact that there's no let up in the conflict between Iran and Israel. The bombardments and strikes, they've entered day 4 now, and of course there's no let up. Both the nations are threatening each other of devastating consequences if they continue to send missiles and stuff like that. But I think markets have taken it in their stride for now, because we've seen wars like play out between Russia and Ukraine. It's been years, right? So for now, I think we have taken it in our stride, and that's why we saw the Nifty snapping out of a 2-day losing streak. In fact, a very strong move today, a 220-point move on the Nifty. It has taken the Nifty above that 24,950 mark as well in intraday trade, just a shade below that level now. But won't be surprising if we see 25,000 back on the charts tomorrow as well, given the fact that it's not just the Indian markets that have seen a recovery. We've seen some recovery across the global markets as well. Asian markets saw good up move. We are seeing US futures are all up 0.5% or thereabouts. In fact, the Russell 2000 index is up, futures is up almost 1%. European markets are trading in the green, and also the fact that crude futures have taken some bit of a breather. 0.5% downtick on Brent crude prices. It's sub 75 now. In fact, sub 74 as well. And gold as well has seen some bit of consolidation after the up move that it saw post the start of the Iran-Israel conflict. But yes, because of that, we've had a good day of trade. In fact, 24,900, I beg your pardon, back on the charts. Even broader end of the markets were moving in tandem, although the breadth was in favor of laggards for the better part of the day, but towards the end of the session, even the breadth, was positive, 1:1. Aside of that, if you look at the India VIX index, that shot up 8%, but it has seen a good cool off today. That's why experts are saying that perhaps, we could see some more gains in the coming days as well. All sectors in the green, IT, metals were leading from the front. IT, in fact, has clocked in gains 8 out of the last 9 sessions, Yatin.
Yes, and no sectors in the green, in the red, all sectors in the green. Advanced decline ratio also better than 1:1, and most importantly, Nandita, we are just 50 points away from 25,000. So, a superb rally in the markets, especially given the fact that the crude oil futures did not show any kind of a momentum today. That augured well for Indian equities. In fact, the crude oil, which touched nearly $75 a barrel, was well below that $74 a mark, despite the weekend, bombing, escalation, war-like situation between the two nations. In fact, a few Iranian missiles hit several civilian areas of Israel, and we couldn't see a substantial amount of escalation, between the two nations in terms of Israel aggressively bombing civilian areas.
Even Haifa port was hit, right?
So there is a petroleum refinery close to Haifa port that got damaged, and no substantial damage, to the Haifa port. In fact, Adani Group gave a statement saying that the report suggesting a complete damage to the Haifa port is clearly incorrect, and there is no substantial damage whatsoever to the Adani Haifa port, in which Adani Ports holds close to 70% stake.
That's true. Yatin, let's take a look at some of the movers then. Thankfully, the list of losers is pretty slim. Just 4 stocks on the losing end. Tata Motors on the back of news flow. That stock was down 4%. We'll talk about that in details. Dr. Reddy's, Adani Ports, and even Sun Pharma. Some observations from USFD, I think, in reaction to that. Although no big cuts, but still the stock was in the red. In terms of gainers, let me just highlight the first few. Bharat Electronics among top gainers. Of course, defense continues to do well. SBI Life, HDFC Life, these twin life insurers were doing well. Ultratech Cement among gainers. ONGC, Tech Mahindra, that was the big winner last week, extending gains. And you also had the likes of HCL Tech, JSW Steel, even some consumer names like Trent doing well. And from the banking lot, you had HDFC Bank also doing well. Moneycontrol reported exclusively that HDB Financial IPO, will, hit the street by the end of June. So that stock was also up and about, up in excess of 1% or so, and the likes of Asian Paints, Infosys, Cipla, TCS, all of these were the gainers. But Yatin, broad end of the markets had also quite a few movers today.
Yeah, a lot of movers. IGL, after that Delhi U-turn on the electric vehicle policy. That stock shot up nearly 7%, and more to do with the crude price also cooling off in the closing trade. We have Gland Pharma that moved 5%, Supreme Industries, Anand Rathi Wealth, all of these stocks were doing well. What was not doing well is obviously DB Realty, 3% down for that one, CCL Products, APL Apollo, APL Limited, those stocks were down 2-3%. Also, BSE Limited and some capital market stocks saw some profit taking from the day's high. BSE in fact closed below that 2700 mark, topping the turnover chart. However, defense stocks once again moving, open gap down, but the recovery was quite sharp. In fact, BEL closed at the day's high nearly 3% higher, and so did Kochi Shipyard, almost 1.5% gains for that stock.
That's true. Of course, defense has been the flavor ever since. In fact, even we had the India-Pakistan conflict. Since then, defense stocks have been in favor. But let's talk about some of the movers in trade today. Then Tata Motors, that stock was in reverse gear despite the strong recovery in the market. Of course, that was news-based. JLR's cash flow outlook, free cash flow outlook, and margin outlook have disappointed the street for FY26. They had their investor day. They've pointed out that they are expecting EBIT margin to be anywhere between 5 to 7% for FY26. This is much less compared to what was reported in FY25. That was 8.5%. And even when it comes to free cash flow for FY26, it is in fact seen at near zero levels. For this financial year, vis-a-vis free cash flow generation of £1.5 billion in FY25. So they are also witnessing or eyeing some bit of recovery in free cash flows, but that is only only from FY27 and FY28 onwards. And they are saying that they are aiming to get back to the 10% EBIT margin level as well, but they haven't really outlined any timeline for that. So these are some of the developments that actually took a toll on sentiment when it comes to Tata Motors. The stock was at a month low in today's session. At one point it was down in excess of 5%, but settled lower by 3.5 to 4% or thereabouts. Now Tata Motors is also facing another roadblock, that is in terms of the US tariff. Of course, it is vulnerable to US auto tariffs as well, as there is no manufacturing facility in the US. So once the auto tariffs were announced, I think they had stopped their shipment to US for a brief period, but when the pause on tariffs was announced, that's when they had resumed it. Now they are saying that they are continuing to engage with the Trump administration as far as tariffs are concerned, and the UK-US trade deal in fact will cut their tariff from the current 27.5% levels to a little lower levels. But in the Slovakia market, which is one of their main markets as well, there the tariff will remain at 27.5% or thereabouts. Now when it comes to the China market, in fact it did highlight that its premium market faced challenges in FY25, but it did manage to outperform the broader market and maintained its #1 position in the premium segment in the month of May. But it is still facing stiff competition there, and there are economic headwinds as well. The company has cited a 15% contraction expected in the premium market going forward as well. But that said, it is also aiming to unlock some value in the Chinese market through the licensing of the Freelander to the JLR JV. Now this first Freelander is expected to arrive in the second half of FY26. So yes, Tata Motors shares had just about started to recover, in the last 1-2 months, but this guidance has come as a setback, and that's why we saw the stock slumping to a 1 month low or so. But the stock was down 4% or thereabouts. And of course, we'll have to see how the tariff situation now pans out, to offset this free cash flow setback that the company has just been, hit with.
I think, the context of the guidance cut is broadly because of the trade war. China is slowing down. There is a lot of uncertainty between US and China with respect to trades, because, whatever you say, we have China, which is one of the biggest exporters to the US markets. Plus, the US markets are now going through a lot of uncertainty with other nations also finding it difficult to negotiate with the US government. So in this kind of scenario, we had some bit of guidance cut for IT companies also in Q4. And, Tata Motors also choosing to remain quite conservative when it comes to the guidance. Yes, there is a cut in the guidance, but when I spoke to a couple of analysts, they believe that the valuation at $700 for Tata Motors is quite attractive. If things look up from here on, there could be a sharp re-rating in the stock. But yes, 10% EBIT is what they were expecting last year for FY26, and now it's close to
almost
almost half,
5 to
6% kind of a range.
That's true, Yatin. And Yatin, you had some chemical stocks on your list.
So today we had Morgan Stanley coming out with a note on chemical stocks. They've upgraded Navin Fluorine and PI Industries. Now let's talk about PI Industries, because that stock moved nearly 5% intraday, closed almost 4.5% higher. Now the target of Morgan Stanley on PI Industries is 5,000 rupees a share, which means a 20-22% further upside from the current market price. Morgan Stanley believes that the agrochemical business for PI Industries should grow in double digits, not only for exports but also for the domestic market. Also, the new molecules will support growth moving forward along with margins, according to Morgan Stanley. In fact, they have revised the FY26 and 27 EPS by nearly 7-8% to factor in better volume growth. Obviously, the pharma segment is also a key driver for the entire PI industry stock. But agrochemicals is where Morgan Stanley believes there could be some further upside to the overall consensus estimates, and hence this upgrade has come up. F&O gainers, if you look at PI Industries, was one of the top in the list.
All right, this bullish report coming in on the likes of PI Industries, stocks for upbeat. And of course, top F&O gainer as well, as pointed out by Yatin. But Yatin, another stock that was in focus was Galaxy Surfactants. That stock had its capital market day, and the key takeaways from there has been highlighted by Motilal Oswal. They are pretty upbeat on the stock. They've said that the company has outlined very ambitious plans for its 5-year growth roadmap, but the plans are well structured and within reach. And which is why I think they have a buy rating on the stock. They've reiterated the buy rating on the stock, and they have a target price which is 30 to 35% higher at 3,180 rupees or thereabouts. The stock was up in excess of 5% today. Now, talking about the Vision 2030, they are planning to double their volume growth. They are planning to over double or 2.5 times EBITDA growth. That's what they're aiming for by 2030, and they are also hoping to sustain their return on capital employed greater than 22%. Now, key internal goal is to achieve EBITDA per kg of 25 rupees by FY30. The company is expecting 50% of the incremental EBITDA to come in from organic growth from categories like hair, oral care and body wash, and around 30% of that EBITDA growth is projected to come from new product portfolios, and 20% of the remaining EBITDA growth is expected to be driven by new avenues and expansion into wellness and beauty focused solutions as well. Now, Motilal Oswal says that volume growth is expected to be driven by steady focus on R&D, in fact increasing wallet share and acquisition of new customers as well, and they are expecting a volume CAGR of 6% over FY25 to FY27, and that will be driven by improving volume in the specialty care segment. Of course, the company, as pointed out by Motilal Oswal, over the last 10 years has already demonstrated its ability to scale profitability despite challenging environment, despite navigating the cyclicality challenges as well, and they have also managed to double their volume growth.
Correct.
In the last 10 years, and by deeper market penetration, category expansion as well, and innovation as well. And EBITDA, in fact, in the last 10 years has tripled, and that was driven by operational efficiencies as well. So, all in all, their PAT also grew 5 times. They had managed to achieve that return on capital employed, of 22 ROCE of 22% already. So, for them to better this, it won't be such a big task, but Motilal Oswal has said to achieve all that in 5 years will be a little ambitious, but still it's so well structured that it won't be surprising if they achieve it.
Yes, and I think Galaxy Surfactants is one of the largest supplier to companies like HUL, and they make a lot of intermediaries which are used to make detergent powders and home cleaning chemicals. Galaxy Surfactants also is looking to expand beyond India. I think they are putting up a new plant outside of India. So let's see how the entire growth shape up. But as you said, Motilal Oswal quite gung-ho on the stock of this particular counter, Galaxy Surfactants.
Well, all right, those were all the stocks on our radar this afternoon, but Yatin, no complaints. We started the week on a good note. Yes. Although Friday also we saw a good recovery from day's low, but the mood was clearly dampened by what's happening in the Middle East, right? Yes. And, even now, even though we saw a good recovery, the mood will be cautious going forward. There is also, if there is some bit of easing in this conflict, experts say that entire global market ecosystem will see a good recovery from here on. But for India, the upside may be capped because of all the paper supply that's there in the market, which is why upside is getting capped time and again. But 25,000, let's hope we reclaim that level. This week, last 2 trading sessions weren't all that great, but since we've started the week on a good note, hopefully we will see a good run as we step deeper into the week as well. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates, and have a great evening.